All right, welcome to a masterclass on how to use ICT's first presented fair value gap. This is a concept that he went through over the last couple of months, 2024, 2025. And in this video, I'm going to try to explain very quickly and precisely, what it is, how to use it, a couple of examples, different types of the first presentation fair value gap, and some advanced rules that you should know about, okay? So what is the first presentation fair value gap? It's very simple. It's as it states. It's the very first presented fair value gap after 930. The one rule you have to understand, it's not the one on the 930 candle. It's the 931 candle and onwards. So for today's trading day that just passed, it formed on the 931 candle, which is great. And you can see here, I have it denoted in dark green. Okay. I called it Thursday, New York, first presentation fair value gap. Usually the way you draw fair value gaps is like this. The low of the previous candle, so the 930 candle, and the high of the next candle, so the 932 candle. But in this case, there's a volume imbalance between these two candles. You can see this candle's close and this candle's open is not the same. They are off by a quarter of or half a point here. So the way you want to draw this fair value gap, and all fair value gaps, is like this, right? From the close to the open, only when there is a volume imbalance present. Okay, so we know what it is. So how do you use this first presentation fair value gap in your trading? So this applies to when you're in a lower time frame trader like myself. And when it forms, there's three ways of getting into it. Method one is going to be there's three ways getting into it. The first one's going to be more aggressive, and then as I talk about them, they're going to become less and less aggressive. So the most aggressive version of using it is when price creates the fair value gap, it trades into it. You take the trade once price is digging into it, and then hopefully it's going to collapse into the direction of your draw. In this case, it was the new week opening gap of this week, the high, okay, which essentially touched it precisely. Option two, which is a less aggressive version of it, is, and let me copy the 15-second chart into this view that we have here. Okay, so the second approach here is getting in on the next fair value gap that's formed on the 15-second chart after the rejection of this first presentation fair value gap. So in this case, we're watching price, it creates the fair value gap, it drops below it, rejects it, and then, oops, we missed the entry. And what we're actually looking for here is, we're looking for the first 15-second fair value gap after this rejection, which forms on the 938 candle. And your entry would be when price digs into it. And essentially you'd place your entry here and maybe a stop above these highs, which is this wick right here, okay, of the first presentation fair value gap. That is, a more conservative option because price is showing that it's rejecting it. And then we're getting into the trade using the next fair value gap that's formed on the 15-second chart. And the third option, and this is the one that I usually trade, is it's exact same concept as the 15-second entry, except it's on the 1-minute model. So we have a 1-minute fair value gap form, let's say right here, after the rejection of this one, and I would get into the trade right here and place maybe my stop above the midpoint of the first presentation, and that's going to be my entry. In this case, they didn't form that. The 15-second entry is the preferred, or would have been the correct option for today's trading day, but there's three ways of entering or using it, and you just have to adjust on what's your risk tolerance and based on back testing, what works best for you. And for me, it's the 1 minute and the 15-second post fair value gap after the rejection of the first presentation. Okay. All right. Number 4, some examples. Okay. So this example here, again, very clean and simple. So for Wednesday's trading, May the 28th, what price has done before the 930 open is it created relative equal lows. And at 930, what price did is it never took them out. It left them untouched. Price went to the upside. It took a higher level target PD array or liquidity. And what it did is it essentially rocketed right back down the first presentation fair value gap. And when I saw this, my bias was price most likely is not going to go up. It's going to want to hunt these relative equal lows. And if you include these lows as well, they're also relatively equal. And what I did is I got on the first 15-second fair value gap after the formation of this white candle right here. That's essentially confirming the 1-minute fair value gap. So showing a snippet of the 15-second chart on here, you can see here that the 946 candle closed, and my entry was the very first tap of a 15-second fair value gap and taking it down to these lows here. This was a small trade. It was, I think, 2.2 to 1 risk reward. But again, here is another example of how we can use the first presentation fair value gap. So here's another example of using the first presentation fair value gap. This is from Tuesday's trading day. What price did is before the 930 open, it took out relative equal highs on the 1 minute, it dropped lower. It created a first presentation fair value gap at 934. Price tried to break through it once. It failed to do so. You can see here the bodies of the candles are closing below the midpoint. And then you can see here it's giving a second attempt to break through it. Once it did, I looked for the first 15-second fair value gap that formed. And you can see here on the lower time frame, this is how it formed. This was my entry. I know it's a quick 2-to-1 trade up to a specific level that I was targeting. And again, here's another example of how to use this very weighted, very strong fair value gap. So, I've said it before, but I highly recommend back testing this concept, seeing how well it gets respected moving forward, and incorporating this into your current trading strategy to increase that strike rate, increase your edge, and make sure that your stop loss gets hit less often. Okay. Topic 4, different types of presentations of the first fair value gap. So recently ICT kind of came out that it's not only the first presentation of the 930. You can also use it for the first presentation of Asia, which is, let's find an example here. Let's look at today's actually Asia session. It just started up right now. It's going to be the very first one after 7 o'clock Eastern. Okay, so we got 7 right here, and it's the first fair value gap. There's one right here. This one's a bit more meaningful, but ultimately, this here is, okay, but this is the first presentation. This is, I'm going to call this Friday's Asia first presentation fair value gap, and I like adding a date as well here, 529. All right, and you can already see how it's being respected. You can see here price, it tapped it many times to the upside before actually breaking down lower. And you can use it as confluence moving forward. These fair value gaps not only work for the session, but they work for later sessions as well. So this is going to be Asia's first presentation fair value gap. You can have the very first presentation fair value gap after 6 a.m. So the pre-New York session. And the last one that you can use here is the afternoon session fair value gap here. Okay. You can see here is, for example, how price is respecting this fair value gap. The last type of version, or the last version of the fair value gap that you can use, is the afternoon first presentation fair value gap. So it's the one that forms 1:30 or later. It can form on the 1:30 candle. It's not like the 9:30 where it has to form on 9:31. ICT has used 1:30s as first presentation here. And you can see here how, even with this one, how price respected it many times for the afternoon session, really failing to break higher. It tried breaking higher once, but it just dropped right below it the candle after, which is classified as a valid rejection, a sloppy rejection, but it's valid. So incorporate Asia, 6 a.m., 9:30 open, and afternoon session in your trading sessions. And these fair value gaps, you'll see, they work a bit better than all your other ones. Perfect. Number 5, there's a couple of rules they have to understand when it comes to the first presentation and how to map it. And the only one is, there is a scenario where you have to use a 930 candle over the 931 candle when creating this first fair value gap here. And it's really when price takes relative equal highs from regular trading hours in the morning. So in this case, we had Thursday's relative equal highs that were formed during regular trading hours. When price opened up, it essentially took all this liquidity out and just dropped right lower. When we dive into the electronic trading hours here, you'll see how this fair value gap was mapped. So criteria 1 is RTH liquidity has been taken at 9:30, and that very first candle is going to be your first presentation fair value gap here. So let's dive into electronic trading hours. Here it is. And you can see here the first presentation fair value gap of May 16th is on the 9:30 candle. You can see how price is rejecting the lower half of this fair value gap. It breaks above it for a brief second and then just collapses lower. So again, these are, I guess, the 5 main points of fair value gaps. Hopefully you guys learned something. If you guys did, feel free to drop a like and to subscribe to my channel. I really appreciate that. And I really hope this brings and increases the amount of profits that you guys make over the next little while. So I guess till next time, trade safe and talk soon.